Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures and cryptocurrency market outlook for tomorrow's trading. That's going to be for the 7th of September. Really just kind of another oddball sort of day. A lot of whippy price action, a lot of news coming out that is throwing the markets around. Just kind of an overall good example of playing it safe, and when the markets aren't really doing what you're expecting them to, it's usually better to keep those cards close to the chest while the market kind of figures out what it wants to do from there, and then jump on board when things are clearer. Overall, just with all this whip and chop and slop, we're really not accomplishing a whole lot in terms of market movement, but we still have plenty to work with for tomorrow's trading. Now again, tomorrow is going to be the inventory day, and that's going to be for natural gas and crude oil inventories, and that is going to be the one that is giving us a little bit of a report on how the hurricanes have affected the supply for those markets. So it could be a very wild one tomorrow, depending on what all happens. Before we jump into the trades and the charts, of course, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to let you sign up for our email list so that you'll be notified every time one of these videos comes out. Along with that, we talk about all kinds of cool announcements and things inside the newsletter, along with different stocks and cryptos and futures and options, you name it. It's going to be in there at some point, so make sure to sign up for that so you don't miss it ever again. Along with that, if you haven't done so already, make sure to click on the live trade room subscription and trial info. From there, you can sign up for a 3-day trial to hang out with us for a few days in the live trade room and get a feel for how everything works. You'll be able to see our screens, what we're doing throughout the day. It's just a really good way to experience what we do every day. Now, obviously, lately, we haven't really had to do a whole lot considering the markets aren't really moving very well, but it's still a good example and a good way to see what's going on. Now, along with that, while you're in the room, you can always ask questions, and it's just a really cool community to get your hands on. So make sure to sign up for that 3-day trial if you haven't done so already. And of course, if you do enjoy it, you can sign up for a weekly or monthly subscription. And if you join as a full-fledged VIP member, you get that live trade room as part of the package. Don't forget to check out the discounts that are going on with the VIP membership as well, so you don't miss out on those. Now, taking a look at the markets today, again, we've got a lot of volatility back and forth, but they're not really accomplishing a whole lot. The euro, we opened up over here. We're going to be closing right there, and we are going to be geared up with an abysmally gross-looking candle, basically just a big doji. So with that movement, overall, we're not really getting a clue in terms of what direction it wants to go. Still, we've been waiting for a direction for, well, since the beginning of September, and we're still not really getting that decision being made yet by either of the market participants, buyers, or the sellers. Really, I mean, in the grand scheme of things, we do still have that same larger term, wider channel, potential bottom low. The channel high really doesn't fit with anything, though, aside from maybe just sort of ignoring this back here and putting a channel high there, but I'm not a big fan of ignoring price levels when I don't need to. So really, I mean, we're just kind of stuck in a range. The euro's not giving us a whole lot to work with, so we're going to approach it the same way that we have been the last several days. Buy low, sell high, stay out of the middle. And right now, we're nearing the low, but still kind of in the middle. We need a little bit more of a pullback to get us into an area of interest. The big area right now, we have a descending wedge working its way lower, and arguably you could even take that and draw it down to somewhat of a spike down into a channel, and they're grinding lower. They're trying to break out of this, and this low is going to be a major area of accumulation down here, really below 19,150. Buyers are going to be scaling in down there, assuming that a breakdown is unlikely to sustain itself before it rallies back up again. The overall trend is still bullish, albeit really weak. It gives us a clue in terms of what to expect here for the euro. Right now, though, we're pretty much range-bound, not really a whole lot we can do. A level of resistance a little further up at 19,365, and above that, 19,450. 19,490. And if we can really get that push back up towards the range highs, 19,545 seems like a solid area of resistance that the market may have a hard time getting through. If we do decide to push down to the lows, we have monthly support at 19,100, and of course 60-minute support a little further down at 19,075. But right now, right in the middle, we got to sit on hands and wait. On gold, a little bit of a grindy trend working its way down for the better part of the day until a little after 12 o'clock, going on 1 o'clock, we started to see a big drop lower. Now, that drop lower really hasn't done much else. It had the big push down, and then it just kind of died and didn't really want to do anything else. So we're stuck into a big spike down into a range, and one of two types of scenarios usually arise from this type of formation: a spike into a ledge where they pause, and then they reverse back up. or we get a spike down, a pause, which could be seen as somewhat of a flag, and then continuation to the downside. Those are the two scenarios, and right now, well, if we zoom out a little bit, we can see here that I really wouldn't want to bet against the long side right now. The buyers have all the reason in the world to want to accumulate the low. The only reason that I would expect to see the market dip down would be for a trap. Basically, looking at this earlier level of support coming into play, we have the channel lows working out beautifully. The buyers are trying and trying and trying, but weak hands, right? The buyers who aren't really as accustomed to how this market moves may try to exit if it starts breaking down, which will likely end up just as a trap for larger buyers to scale more in and then push the market back up towards the highs. The overall sentiment is definitely bullish, and with this little kind of stalemate that we have going on from the sellers, even if it does break down, I have to assume that the smart buyers are going to be on the buy side underneath those lows, not believing a breakout. Wouldn't be a surprise to see them do it, though. Those traps in gold kind of go hand in hand, so be careful there. But overall, in the bigger picture, looking to trap the low for a reversal right back up towards the highs. On crude oil, 430 just recently passed as we have the API report coming out now, causing a little bit of back and forth. For the most part, though, relatively bullish day. A lot of whip in the middle, though, from really 8 o'clock until about 11 o'clock, which unfortunately for me is pretty much the entirety of the morning trading session. Crude oil really didn't do much. Well, it did a lot, but it didn't accomplish a whole lot. And then a big whip up, and that failed right back down. Big drop lower into a big whip up, into a big drop lower, into a big whip up, into a big drop lower, into a big whip up. Just a monstrously gross kind of chop fest inside here on crude. And we haven't really left that area. They tried breaking above the highs. They really didn't get much further than maybe a 3-push wedge top, and now we're fading back again. It just doesn't look that great for crude oil as a whole. We're in a very strong uptrend, but if this is such a strong uptrend, where are the buyers? Why aren't they showing up? And that leads me to believe that they're just not interested at these prices right now. We need better pricing for the buyers to really gain a lot of interest. So in all honesty, what I would love to see is a dip all the way down to these previous lows after that spike up around 48.50, then find some buying pressure to push the market back up towards the new highs. Right now, at these highs, just doesn't seem like the buyers are interested. So because of that, I'm going to be sitting on hands until we can get some better prices for us to start jumping in on. 49 is the most recent area of support, and below that, really, then we're just kind of waiting for those 48.50s before we start really finding some juicy areas to jump on in. If we do find a spike up in the overnight, 49.37 is the area of resistance above us. But for me, I would rather wait for a better pullback so we can get some good prices. And then finally on the S&P, another market that really didn't do a whole lot until around, well, 12, 1 o'clock, and then we started getting a little bit of a kind of a semblance of a bull trend. For the most part, though, really choppy, sloppy. Even in the trend portion, the legs were very pronounced and very big, and that's not usually indicative of a strong trend. That's a very wide type channel, and that offers basically the ability for the sellers and the buyers to be making money, and this type of channel more likely than not ends up transitioning into a range. So with that range type of movement expected, we are still in a bull trend, and we don't want to let go of that yet, but if we start seeing some signs that the buyers are falling apart up here, it wouldn't be a surprise at all to see us wanting to buy low down here and sell high up here. Now, selling on the highs still doesn't look that great. I would rather buy the lows. The overall trend is, for the most part, still sideways. They had that big breakdown, completely failed. Major objective on this, really as a whole, is just to get back up to here, around 24.71 or so, to kind of invalidate that big spike down. They've already done a really good job. They're contesting that earlier area for where that spike really kicked off. And you can see the amount of support and resistance that comes in there when they're bouncing around. So until we can get away from this, I still am going to have to approach this with a mindset of, I want to buy as cheap as possible. I want to buy swing lows. I want to buy traps. I want to get the sellers suckered into the move and then have them get stopped out to fuel my trade to the upside. But for right now, I have to treat it like a range, and unfortunately we are in the middle of nowheresville on the S&P as well. So a lot of movement today, not a whole lot accomplished though, and that is, yeah, that's kind of what you expect on this sort of week. But overall, that's going to do it for the outlook on the futures. Now, taking a look at the news for tomorrow, the news, we do have a little bit to work with. There isn't a ton, but we do have some stuff. Most of it's coming out of the Eurozone. We only have one announcement tomorrow for the U.S. session. That's going to be the crude oil inventories at 11 o'clock. The forecast for those inventories at 11 o'clock are 4.022 million. The previous was negative 5.3, and again, the numbers tomorrow could be all over the place with all of the hurricane impact or influence rather over the inventories. It could be a wild one tomorrow. Got to play that safe. Tomorrow morning, though, at 7:45 out of the Eurozone, we have the deposit facility rate and the ECB interest rate decisions for September forecasted flat at 0%. And then at 8:30, we have ECB press conferences going on. So tomorrow morning, it could be a little bit of a choppy one. Most of it's going to have an impact on the Eurozone side of things, but a lot of those Euro markets will have an impact on the US side as well. So you got to play it a little bit safe there. Now, for you crypto traders, don't go anywhere. Hang out with us, and we will take a look at some of the crypto markets. Now, of course, we have our big couple that we like the most, Bitcoin. Of course, catching that continued rally to the upside back into the 5600s. The high was made, what did that high make? 46.40 and 82 cents. So we are still seeing the buyers pushing. They're not letting off the gas pedal. We have a very aggressively tight bull channel working its way up, arguably even a little bit of a wedge the way that this is forming. Really what I would like to see is a quick snap lower down to retest this nice little shelf that's formed. We can see previously that area was a big area of support or resistance. Right there, twin reversal out, right there, resistance, resistance multiple times. And now we have a level of support. A retest of around that 43.50s would be a potentially beautiful snapback buy to push the market back up to finish the job off. Of course, the major objective on the high is still at 5,000. We're just waiting to potentially get a little bit of a better price. The last time we had this kind of grindy movement, though, was back here, and you can see they really didn't get that big of a snapback. They just kind of went sideways, tested it, and ran off of the moving average. We may have the same thing, but right now, looking for a quick little snap down to around 4,300s or so, maybe a little bit higher, 43.50s for a buy into Bitcoin. Over on Bitcoin Cash, Bitcoin Classic, Bitcoin Cash, we have a beautiful rally to the upside and just a huge amount of buying pressure on this move up. We're still in the same area. We haven't really gotten out of this chop and slop, and if we look at the 4-hour chart that we have been for a while now, we can see that we really aren't getting that much movement. The most recent bull candle looks really good, and the fact that they followed it through with another one shows a lot of bullish aggression, and that weak bear response to it I think is a pretty big clue. So really what I would like to see is a dip back down to earlier resistance turned into support. Find a dip down to 13,800, down to 13,500 for buying support to shove the market up for another leg. Of course, I am still looking for that 0.1. I would love to see 0.1 on the buy side, but it doesn't look like they might. It just doesn't feel like they're giving us the option to get that 0.1. So short term, we do have a buy over the next couple days that could be looking to fire off for another leg to the upside. Major objectives on the highs could be as early as around 0.15. Otherwise, you're looking for the next big push up to 0.18. On Ethereum, we're still not really proving a whole lot. We're stuck around the exact same place that we have been for a while. Previous swing low into swing high. We're a chop fest right now inside here. So until we get a little more info, honestly, I think it's better to stay away from Ethereum until we get that info. We could have a little bit of a wedge. That's about all we have to work with, though. So until they make up their mind on what they want to do here, I think it's better to play it safe and stay away from Ethereum unless you're buying on those big dip lows at around that 0.06. It's about the only way or excuse, really, that I can find to get into Ethereum at this point in time. Litecoin is continuing its rally to the upside. Beautiful continuation. Everything is looking really good. We're breaking out of that descending wedge we've been stuck in for several days. We're finally breaking out of it. In all honesty, very frequently what happens when you have this kind of movement, you have a descending wedge, they break out. We saw them use it as support, but we haven't really had that initial pullback. And a lot of times they'll use that low anchor to wherever the high anchor ends up and look for that 50% pullback, about a half off sale, if you will, for that bounce back up. And that's going to be around 0.165, maybe around that area. It's going to be more of a zone, and that does line up with those previous swing lows as well. It seems like we're building a pretty strong case for a nice little pullback into support around 16.5 to 16, and then push the market back up to finish the job off to new highs, maybe even all the way up to 0.02, depending on how much aggression they want to put on Litecoin. And then we have the couple extras here. Cork is the first one. Cork had a beautiful explosion off of the lows. Monstrous amount of buying pressure rallying the way up. We have a 3-push wedge top with potential of exhaustion up here. What I would really like to see is a snap back to an area of support. likely right before that breakout actually kind of continued at around that 5,000 Satoshi mark. I would love to find some buying support around there to finish the job back off to the highs. There will be some moving average buyers that will be coming in here, but for the most part, everything still looks pretty strong to look for a slightly bigger dip down if we can get it. You know, that 5,000 area looks pretty good if the market wants to give it to us there. Over on ADX, another one. ADX has been kind of an interesting one. Had a little bit of a rocky start there, but they opened up all the way at like a tenth of a Bitcoin or something like that. The market obviously did not find value there. But now we're finding a little bit of balance going back up. We had that earlier major level of support or resistance coming in, and arguably we had a fake breakdown that didn't continue, and now they're trying to get back up. If we can break above this zone and then pull back to it, we could have ourselves one heck of a rally back up towards those highs. That is kind of what we're waiting for, though. Not really any signal yet. I want to see them break above that level of earlier support and resistance, come back and hold it, and then rally back up to new highs from there. And then finally, PTC. PTCUSD coin, however you want to pronounce it, has had a very big rally up once again. This is off the backs of a big rally before, went range bound for a couple days, another big breakout move, followed up with another monster breakout move. This could be the end of this rallying to the upside. We have a 3 push with an exhaustive end, right? They slammed higher, immediately faded back. So it's not to say that this is more of a long-term play. I would rather look at this as short-term bounces if we can get a retest back into the zone of interest. Now, the zone of interest is based off of structure. We'll cut it in half and just say 900, kind of in the middle there. But overall, looking for a bounce off around that 900 for a rally back up. I'm not looking for a huge move all the way back up to highs, although that would be nice to see 1500s again. More likely, we're going to find earlier swing highs as resistance, and that's kind of where we're stuck right now. So at this point in time, I would rather wait for a pullback again to around 900, look for short-term buying pressure to shove the market back up to around 1250 to 1300, where from there we may be able to hang on to a little bit more if it wants to run for another breakout move, but for the most part, it's a little bit better to not get too aggressive on PTC. So that's going to do it for the market outlook on both the futures and the cryptos. Overall, we've got a lot to work with, and, well, there's not a whole lot of news tomorrow outside of the ECB stuff, so we have to play it safe, and today definitely gave us that clue with all of the whip and chop and slop and surprise news here, and this happened over there, and that happened over there. We've got a hurricane there. Everything seems to be a little bit messy. So like we always say, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.